This is Home to All, an all-inclusive real estate podcast with your host, Nicholas Acosta. Nick sits down with guests to talk about real estate and how it works. Reach him at downtown.expert on Facebook and Instagram, or his website, www.downtown.expert, or call or text him at 407-508-8809. Enjoy the episode.
Good morning, everybody, on this cooler than normal Tuesday morning here in Central Florida. I'm Nicholas Acosta. This is the show Home to All, an all-inclusive real estate podcast. This episode is brought to you by Blanchard Insurance. Blanchard Insurance is a paid sponsor of the show. Again, joined by Mike Synthetic with Blanchard Insurance. Good morning, Mike. How are you doing today on this cold morning?
Great. It's actually not my preferred weather. I'm good when it gets down. I love 70s. I love 80s. I love even 60s, but 40s, 50s, it's not my thing. That's why I got the fire going on in the background behind me. And I've lived in Alaska before, and I lived there for 2 years back when I was a kid. But I've been climatized so much to Florida that it's a very painful morning for me, but I'm struggling along. I hope it warms up a little bit. So,
no, I mean I'm from Florida too, so this is unusual. But yesterday, actually, we were out walking our normal walk. Of course, it started out yesterday. It was warm because we're in Florida. Then it started raining, and I kid you not that I swear that the rain, as it was coming down, turned into flurries a little bit yesterday.
Really?
It was basically, the rain was freezing.
Like sleet,
Like sleet. And I'm like, wait a minute. I started my walk when it was hot out. Now it's cold, and now it's raining. And then sleeting, basically. Not like a northern sleet. It was Florida, so it was melting, obviously.
Florida's crazy. I mean, the weather just down here turns on a dime, but I don't know. Hopefully it warms up a little bit because, like I said, I'm in pain right now.
Oh no, it's all good, man. So yeah, we were talking in pre-show. So what's going on in terms of, like, we're getting to the end of the year, and a big thing coming up now for people is looking into health insurance. We were talking a little bit about that, and especially that article that you found on npr.org, which I can pull up in a second. Go ahead and touch on that if you don't mind.
Yeah, I know open enrollment is still going on right now. I believe we got about like another week, and our agency brokerage has never really been involved in individual healthcare to an extent like some other agencies have, who have huge individual health divisions, or that's solely what they do. And recently we announced that we are getting kind of into the ring, and the reason we're getting into the individual health insurance market is basically because of the demand from our clients and demands from friends and family, but also a demand to kind of fix, I think, what is a broken system right now. And I blogged about this yesterday, and I think this is a very important, great article. And it kind of popped up on my radar without even looking for it. But this year, I've been contacted by so many people asking if we do health insurance, and earlier this year, and we didn't. And recently, we're starting to get into it. In 2021 is going to be really the year that we step into the ring and put our foot in the circle and start, helping our clients out with individual healthcare. The reason I never liked it before was because, like I said, it is a broken system. And what these people were calling me about was, hey, I have these plans. They're non-compliant plans with, Affordable Health Care Act, or they're not Obamacare compliant, however you want to word it that. And same story. Everybody goes into the doctor. Their doctor's visit is covered. They pay their copay. They can get a prescription of whatnot. But some of them went in and described exactly like what happened in this article. And what happened in this article is one of these guys, I believe he had a United one plan or something like that. And it wasn't a compliant plan with the Affordable Health Care Act. So he went to the doctor, and the doctor, sad story was, he said, well, you have, I believe it was lymphoma and something on his spine, I believe was a tumor or something along those lines. And what had happened was he obviously had to have surgery, get chemo and all that. And when he went to file the claim against United One, they were basically considered it a pre-existing condition because he had been to a chiropractor for a back issue a couple years before, and they basically denied it. And I guess they're fighting it. I mean, they are not paying out on this claim to this date. So it really, and if people don't understand, when you don't have these compliant plans, you are subject to pre-existing condition clauses. You're subject to lifetime, medical limits. The plan has a lifetime. I mean, you're subjected to, what was before Obamacare. And a lot of people don't realize that. And I've had people who've gone in for, something wrong with their foot and winding up that they had to have hip surgery that cost $50,000, and there was no coverage for that. And so they're always, backpedaling and trying to get, open enrollment, go out in the marketplace and, get these new plans. My take on it is, and this is just a personal opinion, and it's probably an unpopular opinion, but there is a lot of money in non-Obamacare plans and non-marketplace plans. And I'm talking about some of the commissions agents and brokerages make out there could be in the thousands of dollars per just a family plan. I mean, they are making a ton of money on it. And one of the reasons is because a lot of these plans don't pay out these huge claims that are, $80,000, $100,000, hospital bills. And when you get a compliant plan, the agencies and brokerages, they are restricted in how much commission they can make. And I think it's about like $20 per life or something like that. So $20 per person that you're insuring, which is not a lot. But again, to actually sign somebody up for a plan, it's not a lot of work either. I mean, like, a good agent could probably do it in 5 or 10 minutes, for a client, picking out a plan, and then, the client's, going and enrolling and whatnot. So I think there's a lot of money in it. And unfortunately, in this business, there's always been a lot of greed, and I think that's why those plans are pushed. So, my advice to people out there who are going into open enrollment or looking at their plan and questioning it, look at the coverages on your plan and consult somebody who's not in it for the money, who's not going to be, a snake oil salesman, and take a look at things like, what are your deductibles? What are your co-insurance clauses? Are there pre-existing condition clauses? Are there lifetime benefits on there? Because the last thing you want to do is to be negotiating with somebody like Florida Hospital for a $100,000 bill and trying to, declare yourself indigent to get out of paying it. Because, I mean, at the end of the day, that's what's probably the only option is going to happen.
Yeah, it brings up when we're talking about this. We've talked about this many times, Mike. Unfortunately, with the coronavirus pandemic, there is a lot of opportunists out there trying to take advantage of people to get those bigger commissions. Because those people that are the salespeople, not all people out there, all salespeople are doing this, but yeah, the ones that are taking this opportunity are, probably lost their job, lost their regular income. So they're trying to find ways to recoup that income faster. But unfortunately, it harms the consumers by getting like it says on the NPR article, about junk coverage instead.
Yeah. And I don't like, and I when I blogged about this the other day or made a post about it, I said there's two things that I don't recommend anybody gambling with, and that's your health and your life. If you want to gamble, go to Vegas. Don't bet on your health. Don't bet on your life. Unfortunately, we've paid out life insurance claims. I've seen health insurance claims. That's stuff that can, bankrupt the family, ruin lives. And it's something you never want to gamble with. And that's why we've always, in everything we do, we try to be ethical and, watch out for the consumer, because that's the last thing I want to do is tell somebody, guess what, you're gonna have to declare bankruptcy because I sold you, a policy that doesn't cover, cancer, or, hey, I sold you a life insurance policy, because I've had that happen in my family. I mean, when my father passed away years ago, he had been sold this life insurance policy that was worth, a few $100,000. And luckily he had other policies in place at the time, to leave behind to my mother. But when this one policy he had bought, he thought it was something else. And then when it came time to claim the benefits, there was about $1,000 left in the policy benefit. They had drained it that much, and he didn't know. I mean, and it's sad that he got sold that policy, and he got sold it by the military, which was a military insurance company, which was kind of sad. But again, those are the two things I say never gamble with. Again, life and your health. Don't, if it seems too good to be true, if the rate's low, pay a little bit more and make sure you're taking care of that.
No, I completely agree more. That's something that my late father instilled in me, was, especially him being a physician for 46 years, that you don't gamble with your health, like you said, or your life. So, definitely, Mike. So what about home insurance? What's going on with that? I know it's been a while since we've been on the show together, but what's going on with that out there?
Oh, it is, unfortunately, and I'm going to hate to be Debbie Downer today, but it is getting worse, especially here in Central Florida. One of the largest, actually, in fact, they are the largest home insurer in the state of Florida, just closed down Orange and Osceola County. And the reason behind that was, since all the other companies that we've been discussing over the past few months have been closing down in Central Florida because of all the hail and roof fraud and whatnot, this company had been picking up a lot of the slack, picking up a lot of the uninsured people out there, or the people who are getting non-renewed and whatnot. So basically the slack of all the other insurance companies. So they've recently hit capacity and they've shut down. And that's amazing. When you start seeing some of the largest insurance companies in Florida kind of start shutting down because of the capacity issues, that's really scary. And it's getting worse. And actually, I don't know if you can pull this up. I believe it's on my personal feed, but the Orlando Sentinel, which always seems to be about a couple months behind on issues like this, they actually put an article out in the Sunday paper about the homeowners insurance crisis, about the rates that are going through the roof and continually go through the roof. And it's an interesting article because it gives both takes on the insurance company side, but it also gives the take on the, unfortunately, I think, on the personal injury side, where the personal injury attorneys are kind of like, we're making tons of money, but their kind of pitch selling to the consumer is like, well, if we weren't here, the insurance companies wouldn't pay out any claims, which, I'm not gonna name names on that or argue to the fact about personal injury attorneys, but I see their point of view, even though I think it's wrong. But it just shows you that this battle is going to continue. It's not going away anytime soon. It's going to be 2 to 5 years at least till things get sorted out. In Florida, the only chance for Florida is, and I know this is going to sound very horrible to say, but the only chance for Florida for this to go away is catastrophes in other states. And I'm talking tornadoes and hurricanes hitting somewhere, which is going to take the roofing industry and drive it northward, because they're not going to stop until every roof in Florida has been replaced 2 or 3 times and they've made money. And if you read that article, it will show you the statistics. When they're, when a roof claim that traditionally should cost anywhere between, $10,000 to $15,000 on a 2,000 square foot shingle roof, that some of these claims are, with these attorneys' fees, are skyrocketing up into the hundreds of thousands of dollars per claim. It's insanity. But you know that, I mean, coming from the
Right.
claim side on the auto side, I mean, like even auto claims, it's insane in Florida. I mean, it always has been. And they actually did in that article say, like, I've always used this expression about the Florida insurance industry, where that is, the wild, wild west. And actually somebody in that article said the same thing. And I was like, finally, somebody is like listening. So that's what's going on. I was thinking about this morning too, of whether long term this is actually going to affect the real estate industry in Florida. Is real estate going to take a little bit? Is it going to impact it in the fact that people are going to slow down on buying homes because they realize they can't get insurance on them? I mean, I'm wondering, especially on the coastal homes, I'm wondering long-term how that is going to impact. It doesn't seem to be slowing down right now, because I was actually just talking to somebody the other day who just bought a house over on, backside of Disney on 429. And I asked her, I was like, have things slowed down over there because, Disney's, not at full capacity and because of, COVID? And she's like, no, the builders are still building. And I think it's like I think the builders, to a degree, are in a little bit of a panic. I mean, they're trying to finish these developments, and the developers are trying to finish and get out and sell as quick as possible because they don't like what the future holds. And I think, especially in this local economy where you have, God knows, 100,000 people probably laid off like right now with the entire service industry. So it's going to be real interesting to see, how the real estate market is impacted, if at all. So.
No, I mean, yeah, I agree with you on that. Well, you guys know with my Kissimmee listing, which was awesome, that we closed on Friday.
Yeah.
That was on the market for 80 some days before it went under contract.
Wow.
But we all know is my prediction, or my thought is, my take on it, and I'm sure you would feel the same way, is if it had been a year ago before the COVID pandemic, because this house was literally 10, 15 minutes to Disney World parks.
Yeah.
A year ago, it would have sold like that.
Oh, yeah, absolutely.
But people that were investing in that area, like I had investors look at the property, but all the investors that came, like the people that bought it were actually a family. But if investors that came through, shied away from it because the uncertainty of the amusement parks or theme parks around it.
Yeah, and I mean, if you're going back to 2008 era, with the housing crisis, we were very heavily saturated down in Osceola County. And we had been for going back into the 90s. We actually were partnered with a builder at one time. And I mean, they were just building houses down there. And I can tell you for a fact in 2008, where we saw, because we're notified, obviously, when, homes go into foreclosure as the insurer, or, if somebody files a bankruptcy and whatnot, the bank is the first one who reaches out to us. And I can tell you for a fact that our highest concentration of homes that went into foreclosure were down in Kissimmee and Osceola. And it was all due to, basically the theme parks. People were down there, making, barely able to get by, and they had these balloon notes that were about to balloon or inflate, I guess, and they didn't have enough money to stay for the home, so they're just walking away. And most of our vandalism claims came down there, most of our theft claims were coming out of there. So out of all the areas that we saw get hit was unfortunately Osceola, because they're so dependent on the service industry down there. And it's not just the parks too. I mean, I was talking to somebody the other day, and it was about, the hotels and, what's happening with them. And I mean, even I knew somebody who worked at Shingle Creek, and Harris Rosen hated to lay off people and furlough people, but unfortunately he got to a point where he had to. So when you're talking about, it's just not the parks, it's all the hospitality in that area.
Oh, no, most definitely. Restaurants, hotels, businesses that specifically, let's just give you an example. There's a restaurant at City Walk. I'm going to say it wrong. It's called the Twosome Factory or whatever it's called. It's a restaurant themed from steampunk era over at Universal. Yeah. And a year ago, I tried to get into that restaurant, and there were like maybe 3-4 hour waits.
Yeah.
On the 27th or the weekend of my birthday, which was on a Sunday after my birthday. And that day we were able to walk right in, no wait whatsoever. So it was weird. So like you're saying, restaurants are like hotels, and restaurants are being affected too. I've never seen a no wait for this restaurant.
I think one of the lessons to be learned from all of this, and I've even thought about it for our own business here at Blanchard, and even like real estate, even bars and restaurants, or any type of small business, any small to mid cap business. I've said my thought is prepare by diversification. And what I mean by that is like if you own a bar and your hours of operation are between 4 and midnight during the weekday and maybe noon to 2 o'clock in the morning, a lot of these bars need to open up. Why wouldn't you just open up a coffee shop during the day? Diversify.
Right.
Host continuing education for realtors, do more events. Even the restaurants, I mean, I know they're kind of typecast, but I think they get into this most issues like you were talking, like, if you own a steampunk restaurant, I mean, like, you are one thing. There is no opportunity to diversify. Or if you own like a small restaurant, like, do you have delivery operations? Do you have to-go operations? I mean, what's your plan if people can't come in? Even in my own business, I'm looking at, okay, well, the homeowners insurance market is getting real bad. So what are our plans to diversify? I mean, we're in other states as well, but does it get to a point where we're going to get more into, remediating claims? Are we going to get into some type of property management at some type of ancillary, revenue stream to balance things out if things go bad? And I think a lot of businesses would be smart to try to do that, like be very versatile in what you can do in situations like this. I mean, I'd love to, like, I think I'd love to see that happen, here in Orlando, especially in the service industry, because I think a lot of them can, be more versatile in what they do. And that's kind of my 2 cents on it.
No, I like that idea you gave me, and then bring everybody ideas about as you probably know or not know, I don't know if I told you or not, I finally got my instructor's license. And I went to a real estate school to teach online. Talking about diversification, I know I shouldn't say it, but the thing is that the company I worked for 20 years, Progressive Insurance, when I was a claims adjuster, if anything, one of the many things I'm grateful for them teaching me in business was about diversification, about how reorganizing and restructuring, especially when there's downturns in the economy or changes in consumer demand. And that's what I'm very grateful. One of the many things I'm grateful for that company, because I'm applying all those things that I learned into my real estate business now, currently.
They are a company that we have really followed closely and over the years, and we kind of mirror ourselves instead of after every other competitor in town that's an agency or brokerage, or even some of the largest in the world. The 2 companies that, I mean, love it or hate it, that I follow and that we follow here have always been Progressive and Geico, and they are so forward thinking in what they do, and people don't really think because they don't really see behind the curtain like you've seen and like I still see on a daily basis. But then you look at their numbers. I mean, Progressive grew at 14%, which is double digit. Nobody grew at double digits like they have, but they're very smart in what they do, and they're very calculated and how they diversify their portfolio and like what they're doing. I mean, they recently got into the homeowners insurance game with American Strategic about, what going on about like 10 years ago. And they're slated to become one of the largest, if not the largest homeowners insurer in the United States in 10 years, which took, a company like State Farm, 50 to 100 years to do. So they're very intelligent what they do. And Geico, the same thing. But at the core of those 2 companies, what people don't realize, what they do better than anybody else is the claims handling and the service behind that claims handling. I don't care what anybody says. They are by far statistically the best in the business. And we see it on a daily basis. And I think it's that they put all of their effort into that makes them a successful company. You can look at the competition, the competitors who don't actually lose market share.
Oh, they taught me a lot of discipline, especially from being very strong in Geico and Progressive, being strong in claims handling and follow up with customers, because trust me, their strictness was well worth it.
Yeah.
And their discipline was well worth it, because it is nothing that made me I've only been in business as a broker now for 4 months, and I'm growing at record numbers, but I have a lot of gratefulness and thankfulness to Progressive for being on top of me and essentially micromanaging me. But it was, I was frustrated at the time. It's sort of like your parents. When your parents are growing up, you say you got to do this because it's important when you get older. And then you tell your parents as a teenager or when you're 9 or 10, you say, oh, what are you talking about? You don't know anything about this. And your parents are like, well, I lived your life before. I'm older now and wiser. And then you tell them, oh, whatever. And then when you get to this age, like now I'm like, a lot of things I do in my life, I'm like, oh my God, my dad and my mother or my grandparents were right, even though I told them no way when I was a kid.
Yeah. I mean, exactly. That's the best analogy I think that they can come into this conversation. So I thank you for that, because that is completely true. Those two companies look at the long-term goal and the long-term growth. And even in small business, like around here, I mean, I feel like I'm always, when somebody asks my opinion, I feel like I'm always telling them the same thing over and over again in redundancy, which is you're putting the cart miles in front of the horse. Mm-hmm. And you need to look at what the long-term growth is. I mean, you're not going to grow overnight and become a millionaire, because it's not sustainable. It's not realistic. I would rather grow a little bit slower. Yeah, I mean, you're going to have periods of ups and downs and booms and slowdowns and whatnot. But if you want it to be sustainable, and that's how we've grown our business here, is that it's sustainable. I mean, like, we can survive things like COVID. We can survive things like the housing crisis of 2008 because we never put the cart in front of the horse. And I think people look at these, especially when it comes to problems, especially during COVID, some of the observations I've seen are they try to do these big changes which yield small results when they really should be focused on what can I do on a daily basis, what's a small thing I can do. And a lot of those small activities and changes actually add up into the same big result that you're expecting. But it's kind of like, well, let's say I do own a restaurant and it's like, oh my God, I'm panicking because of COVID, so I'm going to go out and buy another restaurant, or I'm going to go out and buy another business. It's like, no. I mean, you should be looking at, how can I increase my delivery? How can I increase my marketing? Stuff that's really cost effective as compared to trying to, put this huge bandage on something that's, going to bleed regardless.
Oh, no. Yeah, I completely agree with you. That's what it's all about. The small little strides that lead up to the big one. Because if you're expecting to become a millionaire overnight, you're going to ultimately fail in a business.
Yeah, and you have to have confidence too. And I've seen that during COVID too. A lot of businesses, when they make these small changes, they're doing them out of panic. And it's like, every decision that you make in business, in my opinion, if it's not a confident decision and you don't back that with confidence, it's going to fail. And I mean, I'm talking about the little wins that you do on a daily basis. Unless you have confidence and are rewarding yourself, and I'm not talking about if you want to take yourself out to dinner, pat yourself on the back, but just to have the confidence that knew it and put a smile on your face at the end of the day, that's the best thing you can do.
No, I couldn't agree more. So, Mike, we have like a little bit less than a minute left. Is there anything you want, a piece of advice? And we're going to also, everybody out there will be on again Thursday to talk about other topics, and probably we'll touch on this topic again, but anything else you want to give advice to for up until Thursday or whenever?
Yeah, I mean, I mean, I think we touched on a lot today, but I think the recurring theme here is for people to slow down and think about what they're doing, especially on the health insurance side. Don't just do it to get health insurance. Actually take a look at it. Like we said, take your parents' advice. What could happen down the road 5 years from now or a year from now. Take your parents' advice. Same thing on the homeowners insurance. You want a company. Yes, we hope your house doesn't burn down to the ground in this fire behind me, but take the time, pay a little bit more, invest in your future, save a little bit of money. You put your parents' advice in your ear, and then as we ended it with talking about small business, plan ahead. I mean, I kind of like tiresome of people just they're planning, they're living their lives by the next day, which I think is kind of crazy. So again, slow down, listen to what your parents said, and a lot of people will be better off.
Well, awesome. Thank you. I couldn't agree more with that. The thing I was thinking was, don't live by the seat of your pants. That's
exactly.
The phrase I was thinking when you said that. Well, Mike, as always, great conversation.
Absolutely.
Today. And we'll be back here on Thursday. No, thank you for being on, and thank you guys for being a sponsor. This has been Home to All, an all-inclusive real estate podcast, coming to you live from downtown Orlando. I'm Nicholas Acosta, licensed real estate broker with Downtown Expert Realty. Again, Blanchard Insurance. Check them out. They get a quote. Exceptional customer service over there. Thank you again, Mike.
Thanks, Nick.
All right, you guys have a good day, and I'll see you guys Thursday.
Sounds great. Look forward to it.
Bye.
This has been Home to All, an all-inclusive real estate podcast. Find Nick on Facebook and Instagram at downtown.expert, and also his website, www.downtown.expert, or call or text him at 407-508-8809. Thanks for listening.
Instead of spending hours or even days looking for your new home, let a downtown Central Florida expert guide you. Hi, I'm Nicholas Acosta, and I'm here to welcome you home. Being a Florida native, I know how exciting, convenient, and stylish the downtown Florida lifestyle is. Whether you're entertaining your guests or enjoying the views, Central Florida downtown has a lot to offer you and your family. Buying, selling, or investing, I'm your downtown Central Florida expert.